up, everybody? Give me a second while I notify everybody on social media that I'm going live. Okay. All right. All right, so I'd like to start out tonight. One, I want to apologize about the sound quality as of lately. I do apologize about that. My microphone, the cable is broken, and I didn't know it was broken and wasn't working, so I've been stuck with the computer microphone. So it's not too bad, but it's not been great. So I do apologize. I'll get the new USB cable and we will get that fixed. So bear with me. Okay. That's the first thing. Second thing, you've seen also, again, you can tell we've had some changes. If you haven't been here in a day or two, to the background, this is sort of my measurement of how well I'm doing. Right here, you can see this is my ending account balance for the day. You can see we're up a bit. Now, this is going to be adjusted. I made one trade. We're actually going to talk about what happened here a lot today, and we're going to go into a lot of stuff and how it relates and why, if you're going to trade, you need to read this book, okay? Without further ado, I am Russell List. This is the Russell Journal, and you are looking at the series we're doing called From 10 to a Million, all right? I've started with $10, and I'm trying to get it to $1 million, okay? That's my goal. Don't know how long it's going to take, but I'm going to keep going from this stash point right here. Okay. Ultimately, the dream is to day trade this into where it needs to be. So that's all sort of being said. That's the goal. As far as how I performed in the market today, good and bad. So I took on like a really good short position as we saw weakness, got the pullback, and made this small amount of money, a little over $36. But I will go and I will show you where I made my mistakes. Now, anytime you make money, I guess is good, but it's still, I can be a better trader. This is not about just making money. It's about being on the right side of a trade and knowing how to get on that right side of the trade. All right. And we'll go in and discuss this a lot more and stuff as we go through and talk about the book. All right. So for those of you who, let me see where, there we go. This should get us. Okay. So you can see again, the exact amount of money we made, the balance at the end of the day, everything, seems to be right. Now, the thing that we want to talk about today is FOMO. And what happened here is I FOMO'd into a trade. I'm going to bring up the chart so that you guys can see it. And we'll talk about how sort of this played out on the chart and where I really made my mistakes at and how I'm going to try and not repeat them. All right. And when I made this trade and it happened, I was reminded of this book. This book is called Reminiscence of a Stock Operator. Now, this is hands down, as far as I'm concerned, the best day trading book on the market. Okay. And so the book is published in like 1923. And it is still the most relevant tool you can have as far as learning about day trading. Okay. There's three big things that you need to learn in order to day trade. Obviously, you need market structure, you need market psychology, and then the big thing is that you need to know the different players that are in the market and what moves they can and will make and when they're most likely to make those moves. This book will give you a real world examples and real world teaching story of where that is. And to be honest with you, as far as I'm concerned, this is the fourth time I'm reading this book right now. And every time I go through, it parallels a new level of my trading journey. Okay. It starts from just being a price action trader to beginning to develop a more macroeconomic, thesis as far as how to trade these stocks, how to really make good money at doing this, how to really limit your risks. And it all tells the story, all this through telling the story of a guy named Larry Livingston, who was a real trader. I can't remember, something Livermore, I believe is his real name, was the guy who the story is based on. He has a fictitious name, but the guy is really the real guy. There's a couple of other things that you need to understand and why this book is so absolutely important. Okay. And I've said this before to a lot of different people. Trading isn't just a job, okay? And it's not just a side hustle, okay? Trading is a culture. There is a whole culture around trading. It has its own language. It has its own rules. It has its own, like, sort of, things you do and don't do. It has its whole system, for trading. And the first part of really, listen, language carries culture. It is the vehicle in which culture is transmitted. If you don't understand the language, you don't understand the culture, and you can't operate within that society. So we have a society of traders. We have a market of traders. Unless you speak the language of these traders, you are not going to be able to. You're not going to be able to operate within the space. So learning the language of traders is very important. And you have to understand, it's not just about a bunch of words with definitions. We do things with language that are incredible, okay? We build cliches, we build double entendres, we build all sorts of really intricate things, each with our own individual language. And the thing is those all revolve around events that we have already had, right? And because those events have happened to all of us in this one particular place, speaking this one particular language, it has meaning, okay? I will tell you, every trader, every serious trader has read this book. This is the number one read book by any day trader, any serious trader. And on top of that, this is also the number one quoted book by any trader, okay? So the lessons that we learn in this book, the teachings this guy has, the proverbs, the cliches, every trader you will ever meet will speak the language, and it stems from this book, okay? All of that. Now, don't expect you to go in here and find a Bible. You won't find charts. You won't find graphs. It's just a story. But this story follows the life of this guy who just has an incredible life learning to trade and learning to become an immensely profitable trader, okay? So it's super, super valuable as far as that goes. So I highly recommend it. I didn't link it anywhere. I'm not an affiliate. I don't want your money. I want to make money from trading, not from selling courses or in programs like that. So that is that book. And it's really super important that you read this book. If you follow this journey, that is the process that you're going to go through, the process that you're going to take. And it's good. Your mind is going to digest it in different ways. So we're going to go around and talk about one of the concepts in this book, the idea of FOMO and trading on emotions. I'm going to show you where I made this mistake today and where I'm going to try and not make this mistake actually again. All right. So give me 1 second. I'm going to pull this up. Transition. Okay. There we go. All right. So, I actually have to pull that right here. So I got the chart up. I need to see the controls. I need the controls. Why does it feel like everything is always moving on? All right, I want to be able to see my screen. Sorry, I don't know where this is at. I'm still... There we go. That's what I need. All right. And then we're going to go up here because I want to be able to point at what I need to point at. Okay. So you can see right up here behind me, we have the chart of IWM. All right. Now, this was my move. Okay. We have been in a relatively bear market. All right. And this is a chart from today. This is IWM today on the 1 minute. Okay. And I want you to see a lot of stuff on this chart. Okay. And I'm actually going to pull up. I'm going to scroll in a little bit so you can see where I caught a good move right here. Did that fix it? I want to make it big enough that anybody can see it. Okay. It's going to look very dramatic. Okay. There we go. That should be right. Okay, so you can see this chart behind me and what I got going on here. Okay, so this morning I sort of I'm the way IWM has traded in this sort of bear market is we've caught this massive run up. We catch these massive runs up and then these massive flushes, as you can see. Okay, let me switch to this side. So we obviously we have the run up over here, all the way to here. All right. Now, I had identified this yesterday as the point of resistance. I shorted at this point. I caught the ride all the way down to here, and just before this candle broke in, I cut out. Now, this looks all big and impressive on behind me, but this is this is barely a $1 move in any direction. Okay. And for my efforts, I made about, 26 bucks or 26. And it was good. It was a good scalp. That was a good scalp. Okay. As far as any scalper would consider, hey, that was it. Right. And some of the stuff I want you to see is obviously this here, that is the 50 EMA. This is the 200 EMA. And when the price got below the 200, that is where I decided it was time to start looking at cutting. And I had preset that in my trade plan before I traded. Okay. Fall below the 200, we're going to catch up. Okay. Now, what I didn't anticipate was the market to really take on this massive bull trend. And we will go back to, let me reset this. I'll reset the chart. Pull this back over. I'm sorry. Apologize. Yeah, this is today. There we go. All right. This is a resetting of the chart. Okay. All right. Now, as you can see, okay, so this was this little itty bitty. Let me go over here. So this is this little itty bitty corner right over here where I shorted, and that was great, right? Good. I shorted at resistance. I sold at support. I made money. Okay, great. But look at everything I missed. This whole move up that I missed. Okay. And that was a big, very heavy, very strong move to the upside. Okay. I missed all of that. Okay. And in that, this is where I'm talking about getting on the right side of the trade. And this is one of the concepts that you will get into with this book as Livingston kind of figures out in the book. He starts to look at what is really the long arc of it. And it's different. Okay. I want you to understand, if you're an investor and you're watching this, this is different than just having money constantly going into the market. Okay. This is a trade, and it's designed in the trade. And you looking at these big swings within the trade and these moves within the trade. Okay. So it's not the same as just constantly dollar cost averaging into the market, buying the dip, Okay. And you'll understand that I highly suggest, again, you read the book. Okay. But I missed all of this. I missed all of this move right up here. So And now again, this probably only equates to about a couple $100, but this is a trade I could have taken very easily. I had the money to enter the position and take that trade, and I missed it. And when I came now, I wrote in the description today, in my article, I ignored the market after this trade. I ignored them after I closed here. I ignored the market. Okay. Here I ignored the market. But what I did is when I came back to check up and see on how things were doing, we're all the way up here. And we'd actually gone all the way up here and we started this pullback to here. I'm going to go ahead and zoom in and I'm going to show you where I made my mistake. Okay. So we're going to pull this and we're going to do this, make it big. Okay. I'm going to see if I can show you guys this. I am having trouble fitting it. Okay. All right. So this was my trap. Okay. Let me go back over on this side. It's easier if I go. So this is my trap over here. We get this big move down. Okay. And that was a good move. And then obviously going to bounce up. We test the 200 right there. And then we continue on down, come up, test the 50 and the 200. Okay. Now, here's the thing. What I'm expecting here after a rejection of the 50 is a continuation to the downside. Okay. So when we came down here, right as we crossed here, I took in came down, bounced up, completed that inverse. This is called an inverse head and shoulders. Okay. So this peak right here, that's peak number 1. That's your shoulder. That's your head. That's your shoulder. It's an inverted head and shoulders. Okay. Now, this can typically break up or break down one way or the other after it happens. This instance, it broke to the upside. Okay. Now, I had been kind of watching this inverse head and shoulders, but with the rejection of the 50 and the 200 at that point, and the 50 coming under the 200, I fully expected the continuous move to the downside. Okay. I expected it to continue to go down over here. Okay. It did not. And I thought, I actually had no idea what to think at this point. And so I knew the fix was in, but I wasn't sure how bad it was going to be in. And we got up here. We got up here to this part right here. Okay. Where we got up in this area. We came all the way up. We pulled all the way back into the 20-day EMA. And I was hoping again that it would complete and come back down, but instead it just continued to rise. All right. Now, I don't know why it did this or anything like that, but what I did see here, when I literally shorted like on this candle right here, like right before it rocketed up. Right. The first 30 seconds, if you can see this one with the wick on it right there, that little stick sticking off the back, I shorted that. It was red and then it was green. So it went like just, okay. Now there's a couple of reasons that the market is probably there's a few reasons that the market could be taking off. Okay. Now, what I will tell you is all of the reasons are bullshit. Every reason they're going to give you for the market taking off is bullshit. Okay. After reading this book, the thing that I realized is like, if we look at market conditions, if you look at the macroeconomic level of the market, okay. If you look at the macroeconomic level of the market, first of all, we don't know anything yet. Nothing has actually happened yet. All right. I want you to understand. Nothing has happened in the market yet. Okay. Yes, the Fed is talking about raising rates. It's probably going to happen. Yes, inflation is on the rise, but the majority of people with any real money aren't complaining about it just yet. Okay. It's only us poor folk that are actually crying about inflation. Okay. So that hasn't affected the earnings of companies like Microsoft and Amazon and Google and so, right? Because their customers, are you really a customer of Google? How much stuff does somebody who makes $30,000 a year buy from Google? You know what? You don't buy anything. You know why? Because in Google, you're the product, by the way. As far as Google's concerned, as long as there's people and the poorer they are and the more free shit they need, the more they have you to sell to the people who do. Okay. So the thing is like, it doesn't really actually matter, right? As of yet, because nothing's happened. You're still a free product for them to sell. You want to see what happens when you stop being a free product and that you can sell? Here, I'll show you. Here, I'll show you what happens when you stop being a product for them to sell. All right. See that? That's Facebook. All the way up here. It's up over $300 up here. Down here. Oh, let me go back over this side. Down here. Down here. There it is. Right there. Like 217. This black space. This is one afternoon. Shit, that's not even that. Let's pull it back. Here, I got to pull it back. This is like 2 days. Let me do the daily. This will show you. This is what happens when they run out of product. Okay. There you're at 300. Down over here. No, you got to go down over here. 217. Lower than that, probably. 215. This whole drop, 3-4 days. So the thing is like whatever they tell you until it happens, nothing's happened until it happens. Like nothing has happened. And this is a mistake that I made. See, Fed's raising rates, that FOMC report comes out, everything starts selling off. And now we catch this rally. You know, if I pull up on let's pull up SPY. This one for you. On the daily. Okay, so we fell all the way down here. Where'd we go to 300? You're at 428 down here. You know, and now where are we back up to? $450. Hell. The hell, Weeble. Stop it. Okay, so you wind up with a 22-point swing. And look at all the green. Look at all this green in it. And the green in it, and the green in it, and the green in it. Okay, so there's a couple of things. One, nothing's happened yet. So these companies are still, the companies that are valuable are still valuable. The ones that are producing goods and make a product and a service, they're still valuable, and they're going to be here after all of this shenanigans are done. Okay. But this is something that, like, this is a mistake that I made that literally parallels Livingston's in this book, where, you know, he was hoping for this bear market to come in due to, in 1906, there was a war, and he was hoping for this bear market to come in because there's British investors were running out of money to put into American stocks, much like today. And so he's waiting for this bear market, and he shorts it, and he loses like literally everything. You know, he loses everything. I did exactly the same thing. FOMC meeting happens. We hit the notes on the we hit the notes of the FOMC meeting. Fed is going to raise those rates. And they're also going to unwind that balance sheet. And boom, I'm thinking that's it. Bear market. It's going straight down. Could not be more wrong. That hasn't happened yet. Right? Nothing has happened yet. Sure, we get the correction in the market. Sure, that happens. But you haven't seen the actual bear market yet because it hasn't happened. It's coming. We can all see it coming. And we all know that for the last, 2 years, not to mention all the years before that and the years before that, they've been doing quantitative easing. Okay. You have an economy that is rich on QE. It's rich on money made from quantitative easing. It's not money. It's not value added. Okay. And you can look, Dr. Lacey Hunt does the best version where he explains what debt matters and what, productive debt. Okay. Debt's not bad, but we need it to be productive, and how unproductive debt has actually been in this country. If you want a good example of this, look at China. Okay. You have the largest amount of unproductive debt in their housing market right now. Their economy is crashing because they were building houses and they were borrowing untold sums of money in order to do it. And then if you look at like the 35 ghost cities that are around China, you're looking at like, it's literally like, what is it like? Circle gets the square. It's celebrity squares. Like, I'm not joking. Like, you can look at these houses and they're literally just a bunch of like concrete boxes built on top of each other. But these don't have like any stairs to go up or go down. They're literally just cells built in a building format because the country was paying they were buying this shit. So there's like no actual building, no inhabitable in 35 cities. I think it's 28 or something like that. I remember the exact number. So that's unproductive debt. We get for what we borrow, you don't get anything. Okay. And the truth of the matter is, if you look at things like the income gap, which there's an income gap, okay? It's not a liberal thing, okay? There are people who make a lot of money. There are people who make less money. And the difference between those things is the gap. That's all I'm saying, okay? But that gap is getting further and further apart, okay? Which means the people on top are making way, way more money and the people on the bottom are making way, way less money, okay? That's a real thing. And the only real question is, how do we fix it? And I guarantee you it's not redistribution of wealth, but that's for another time. Okay, anyway, but because of that, you have a stimulated economy. Your economy is been stimulated and they've gotten by on QE, but nobody has any actual real money besides the QE. Well, now what they're going to do is they're going to unwind the balance sheet. So all that QE they put into the economy, they're going to suck it out of the economy. Okay. When those bonds mature, okay, if you buy a bond from me, okay, you buy a bond from me for $100 friggin' dollars, I'm going to pay you your interest payment, all your yields that you're going to get from me. And then when that bond matures, I have to give you back the $100. Okay. Well, the Fed's got like 9 trillion of these dollars all in bonds that are coming either into maturity or that they're going to sell. And when they sell them, that money goes to the Fed. Does the Fed manufacture a good or services or products that immediately affect, right? Are you going to go buy a can of beans from the Fed? No, you're not, right? I'm not saying they don't have a value or anything, or I'm really against the Fed. I'm actually kind of not. But they're going to unwind that balance sheet. They're going to suck $9 trillion out of the economy. And the people who have been getting by on that stimulus, the businesses that have been running on debt, right? They're also not going to have that debt. So even those low-end jobs that are created from the cheap loans that people got, your little mom and pop restaurant, isn't going to make it because you won't be able to borrow more money and you're not going to be able to keep those jobs. So this collapse, this depression is going to come. I think it's going to be a depression. When is it happening? Could be 2 years, could be 3 years, could be 4 years. Could, but I'll tell you what, it's not going to happen. It's not going to happen this month, and it's not going to happen next month. Matter of fact, it's probably not going to happen by the end of the summer. But it's coming. And this is something that I've been way out ahead on. I've been looking way, 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 way out there. And now I need to bring it back and focus and look, okay, and see what's happening. So this rally here, this particular, so on the daily, this one green candle comes from one report. And that was that Goldman Sachs, or not Goldman, Chase Manhattan has they have an indicator that is 100% accurate, except when there's a recession. We're not in a recession. Their indicator reached its moment of indicating relative to the VIX. And these guys said, oh, that's good, indicator, we'll go. And they're driving it up. So it's not, here's the thing, where I have been bearish before on this, where I was thinking this is going to be a bounce, we're going to get this bounce up, we're going to come down, retest this same, see this spot here where we got this low over here. I was thinking we're going to get that over here. Not thinking that anymore. Now, I'm not saying it can't happen or it won't happen. It might. There could be a scare of some sort that causes that to happen. But as of right now, my mind has flipped more bullish. I'm with the crowd. Okay. So, long term, yeah, we're looking far out as far as like some sort of thing is coming and it's set up, it's in the works. Something has to build pressure. I'm going to bet, so what we had before, you had, so in 2008, so in 2000, when you had the dot-com bubble crash, that came from, when you had the dot-bomb that was a crash due to equities. They just dumped equities into the market, especially technology stocks. In 2008, it was bad mortgages took down the market. In 2020, it was a glut of what do they call it? It was a glut of oil. It was an oil glut. They had too much oil. They had to get rid of it. So they dumped it and they just sold it for whatever they could get. And then the last thing, this time, because of the bottlenecks in inventory, it's going to be retail inventories this time that take down and collapse the market. Now, again, if you want a good read on this, I got this from a guy named Steve Van Meter, calls himself the Bond King. You guys go check out his channel. It's a good channel. But remember, this stuff that he's looking at 1, 2 years down the road, 3 years down the road, you've got a long way to go before this whole thing sets in. So anyway, as far as I am concerned, I am tired and done ranting. So you guys need to pretend I said a catchphrase and have a good night. Oh, that did that.